Hello traders, Gary Wagner here just after 10:30 in Honolulu, 3:30 in New York. It is Wednesday, the 11th day of November, 2015, and this is the daily report for gold and silver. We do have the precious metals complex once again under pressure. Gold trading off about $3 to $4 on the day. 1084.70, that is the current COMEX fix. It's seen a low of 1083.20, so we're just off the lows. High 1093.50. Once again, as you can see, a very small range, tight range on the day. It really becomes evident when we look at our daily chart. I've just gone ahead and pulled that up. And what we are seeing is, yes, the markets continue to track lower and continue to trade under pressure, no doubt about that. But as we look at them and we consider the magnitude of sell-offs that we have seen on some of the days just preceding today's activity, the one thing that we can say and the one thing that we can observe is that we are looking at these last 3 days, although they have been down days in the markets, having a characteristic of a very, very tight range between the high and low, and also a very tight range between the open and closing price. That tells me that a lot of the momentum that we have seen in this marketplace to the sell side is in essence beginning to wane. Now, of course, there are quite a few ways that we will look at the strength of a current trend, and we're going to look at our Japanese average charts in just a second. One of the ways, though, is to look at momentum and moving average convergence divergence. And we have our momentum, as you can see right in here, and that's beginning to wane just a little bit. It looks like it peaked really on Friday of last week and Monday of this week. So traders, I've pulled up a straight momentum study, and when we do look at the momentum study, however, we're not seeing a real decline. If anything, we're seeing an acceleration. You can see that right in here. So the next thing we want to look at, obviously, is going to be the Japanese average charts and see what information we can glean from that study. So as you can see, I have converted our basic candlestick chart into a Japanese average chart. When we do that, our observations are really that today's candle, in terms of the size, Japanese average size, it still lacks any kind of upper wick. So we've still got good pressure to the downside. You can see the evidence by the number of consecutive days we have seen, as a down day, but two, more importantly, the absence of any kind of upper wick and large body size, especially when you look at some of the candles that we saw last week right in here, tremendous body size. So that really tells you that as that distance grows between where the market is closing and where the midpoint of the prior day is, it continually moved away or accelerated. Now, over the last couple of days, specifically yesterday, we did make a comment yesterday, and the comment was that for the first time we saw this body size actually begin to decline, and that of course is right in here, this being yesterday's, and of course today's candle here. So we do have a contracting body size, but we don't have any real indication that the selling pressure is over. What we are getting a clear indication of, though, is that the selling pressure itself is beginning to diminish in strength. Not necessarily end, but diminishing in strength, because we're not seeing the kinds of dramatic drawdowns that we were seeing throughout the last couple of weeks as this market really went into a free fall. So we're still going to look for signs, and as we talked about the other day, the kinds of things that we'll see in a Japanese average chart that will give us an indication is really that move to a smaller body. Of course, the first thing we want to see is when they have any kind of upper wick, because what the upper wick says is it's beginning to trade at and above the midpoint of the prior candle on a daily chart, obviously the prior day, and then we'll see it move from red to green. Again, that is a real indication that the market has shifted, that we've seen the pivot, but it's going to lag behind raw candlestick patterns that will appear and other indicators because they are average based. The second type that is most prevalent in terms of key reversals is this consolidation type of pattern, in which you'll get bottom activity, market trading sideways for quite some time, and then move green. Now, my sense is that we're probably going to see consolidation, and the reason I believe that is when we hit these record lows, and as I said, I call it a record low because it is the lowest price that gold has traded to since being at 1900. we had a really genuinely long period of consolidation before we had our first of two major rallies that came into the market, accompanied by a couple of minor peaks and valleys. But I would more believe that we will see something like this in terms of the pivot point than a complete turnaround. But either of them are the type of patterns that we are looking for. Another thing that is fairly noteworthy is the fact that we are looking at a lower dollar today. We've had dollar strength really being a massive contributor to the decline in the precious metals markets, obviously. And today we have the dollar off about 1/3% when we look at the net change of $4 off in gold. We have to take into account actually dollar weakness at this point. And when we do that, what you see is that normal trading is providing a negative $7 in terms of the value of gold, and a weak US dollar is adding about $2.80. Lastly, I do want to take a look at silver because that has been really in a virtual meltdown. Compared in terms of percentage drawdown, silver has lost a lot more value than gold has. When you look at a weekly chart, that's this chart right in here, what you see is that in terms of the range of the week where we've seen gold really begin to slow down in terms of its losses on a day-to-day basis, we've seen silver really accelerate that, especially last week where we had the dynamic sell-off. And I guess the one thing that concerns me the most is when we take a look at this marketplace itself and consider the lows that we had here, in which the market really went to $13.99 and in essence began that day just below $15.50, so a tremendous drop. If you look at the real bodies of all of the other weeks within this trading range, you'll see that we have definitively now broken below that point and almost certainly are headed to $14 per ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.